I personally trade London, New York, and AM session using 8 different daily cycles. But today I want to show you it doesn't have to be that complicated because there's actually a 3-step process which would have generated you 8R in gains in the past 2 months. And all you would have needed to do that is New York session and 2 of the 8 daily cycles I use. So let's get right into it. Today I'm going to be showing you that 3-step process. So let's get into the process and then I'll show you the trades. The first step, you're going to be identifying daily bias. The second step, you're going to be identifying one of the 2 daily cycles for New York session that I'm going to show you. And then the third step is identifying that flexible entry model that I teach in multiple of my videos, and I'll get into that as well. So we'll start with daily bias. Now, I never trade when price is in a consolidation. I have to be trading within a trending market. So I'll either identify a bullish or bearish trend. And essentially, I'm always going to be trading towards either external range liquidity, like old highs and old lows, or I'm going to be trading towards internal range liquidity, like bullish FVGs or bearish FVGs, which means whether we're bullish or bearish, I can actually trade in both directions. So I can either catch this leg or I can catch the leg down, or I can catch this leg down and I can catch the retracement leg up. As long as I have a clear internal or external range liquidity target, I can go ahead and take the trade. So first of all, I identify whether we are bullish or bearish. And then I go ahead and identify whether price is moving towards an internal range liquidity target like an FVG or an external range liquidity target like an old high, old low. Once I know that price is moving towards one of these things, I can actually trade in the direction of that target. And another thing that I make sure that I do, because I'm an intraday trader, is I make sure that the 4-hour or the 1-hour is always in line with my bias, right? So let's say, for instance, I'm looking to trade in the direction of this old low here. I will make sure that within this leg, right, the 4-hour or the 1-hour is bearish. And essentially, I'm just going to be looking to catch these highs up here and trade down towards this external. Let's say, for instance, I'm in a bullish trend and I'm actually looking to catch this move down here to target this internal. Then again, I will make sure that the 4-hour or the 1-hour is bearish here, right? And I'm trading in line with either the 4-hour or the 1-hour. Okay, so that's essentially how I do my daily bias. Identify internal or external range liquidity, make sure the 4-hour or the 1-hour is in line, and then just trade in the direction of that internal or external range liquidity. Very, very simple. Now let's get into step 2, which is the daily cycles. Now usually when I'm trading on a regular day, I have the choice between 8 daily cycles. Okay, that's spread out between London session, New York session, and AM session. Now when it comes to New York, I have 4 daily cycles. So 4 out of the 8 daily cycles are for New York session. Now in this video, I'm showing you can keep it very, very simple, use very few daily cycles in one session and still come out with 8R gains within 2 months. So we're not even going to be using all 4 of the New York daily cycles. Nah. Today, I'm going to show you that you can just use 2 of these daily cycles and still come out with incredibly favorable results. Now, if you're new here and you don't actually know what daily cycles are, very, very simply, they're frameworks which allow me to predict where the next kill zone is going to push with high accuracy. So these 2 daily cycles rely quite a lot on what London session has actually done. So one of them is a New York continuation. And in that particular cycle, we look for London session, which is this purple box. We look for London session to run towards our liquidity target, right? So let's say we have a target up here. We look for London to run towards that, but it doesn't quite reach the target, okay? And then from there, we're simply looking for New York to continue the run to that target, right? And this is called a New York continuation. And one very, very obvious characteristic of this is London will impulse. Then in between sessions after London, price will start to retrace, and it will retrace into the start of New York, and New York will form a low and then impulse towards the target, right? That's the gist of a New York continuation cycle. And the other daily cycle is called a New York reversal cycle, where again, we have some kind of liquidity target that we're looking for price to impulse towards. But instead of New York respecting London's low, see how we got the retracement and it didn't take out London's low. In this particular example, London is actually going to be the liquidity sponsor. So we'll have London session represented by this purple box again, and New York will actually sweep out London's low, right? New York will take London's low and then expand to the upside towards a liquidity target, right? So it will look something like this. London can impulse a little bit if it wants to, or it can consolidate. It doesn't really matter. The key part is the fact that New York takes out London's low instead of respecting it, and then it will run towards a liquidity target. So if you really wanted to keep it simple, you could use just these two New York daily cycles and trade very, very profitably, right? So we have one that continues with London and we have one that manipulates London, and then they both run towards some kind of liquidity target. Now, there is actually a little secret about the timings when it comes to taking profits with these cycles. So when it comes to the New York continuation, we really only anticipate this to run until the end of New York kill zone, right? So for me, New York kill zone's 12 p.m. to 3 p.m. GMT, okay? And we essentially expect New York continuation to run until that 3 p.m. timing. But when it comes to the New York reversal, even though we are trading in the kill zone and we expect it to run until 3 p.m., we can actually anticipate this running a little bit further through what's called London close, which is from 3 p.m. to 5 p.m. Greenwich Mean Time. Okay, so when it comes to this New York reversal cycle, we can expect an extra couple hours of impulse if we have a clear target still. So let's say it gets to 3 p.m. and we haven't reached the target yet. Let's say the target's still up here. We can actually expect a little bit of a run outside of the kill zone to go and reach that target. So that's step 2. Look for one of these daily cycles. Now let's get into the final step before I actually go ahead and show you these trades that took place over the past 2 months. So let's get into the last step, which is my flexible entry model. Now, what I mean by this is I'm not limiting you to one PD array. You know, sometimes you'll see people say, okay, breaker blocks are the best, or you'll see people say IFVGs are the best, or you'll see someone say, oh, it has to be a market structure shift, or it has to be, what's another entry type? Like just an FVG entry. Whatever it is, people like to restrict you to one PD array, which is bullshit, okay? It simply doesn't matter. All you need to look for is a switch in order flow. So let's say we are bullish and we have that retracement below liquidity. All we're looking for is for price to switch that order flow. It doesn't matter what PD array it is. It really doesn't matter. Once we get that switch in order flow, you can enter and you can take an entry of any of the PD arrays that form towards the liquidity target. The same in a bearish example. So let's say we're bearish and we're getting that push above liquidity, and now we're looking to sell. It doesn't matter what PD array forms. You just need to see the switch in order flow, whether that's a breaker block, IFVG, order block, FVG, it doesn't matter. You need to see the switch in order flow, then you can enter off any of the PD arrays. So now you see why I call it a flexible entry model, right? Because I'm not telling you to stick to one PD array. And I actually made a video on this that goes way more in detail, and I'll link it up there in the corner. I think it was one of my most popular videos, which is pretty cool. So yeah, that's step 3. We're looking for daily bias, one of the 2 daily cycles I just showed you, and a flexible entry model. If you did this over the past 2 months, you would be up plus 8R right now, which is very, very nice. So let's show you them trades. So let's get into the examples, but first I want to let you know that this is a very simplified approach to my trading strategy. It generates great gains, but if you want the potential for even more gains, then I highly recommend that you go ahead and learn all 8 of the daily cycles that I use. Now, they can be found within the Daily Cycles program, which comes with a 7-day free trial, and you also get access to 6 in-depth technical courses. So if that's something that you might be interested in, I'll leave a link in the description. I'll make it the top link. But yeah, let's just get right back into the video. This first trade is on gold on the 13th of December 2024. Step number 1 is the daily bias. So you can see here that price took out this external range liquidity target, which means that price is likely to draw towards internal range liquidity. Okay, so you can see on the daily that price is clearly within a bullish trend, right? If we look at how price is forming the highs and lows, price is bullish, but that doesn't mean that we can't catch the sells into this internal range liquidity target because it's still a high probability target. We just have to make sure the 4 hour or the 1 hour is in line. So this daily FVG would be the internal range liquidity. And then if we jump down onto the 4 hour, you can actually see that price has formed this bearish CSD, right? When price closed beneath these last 4 up candles, we formed a bearish order block. So we're forming bearish PD arrays. So the 4 hours in line, and we can go ahead and sell towards that target. Now, step 2 is to identify the daily cycles. It's either going to be a New York continuation or a New York reversal cycle. And if we have a look at what London has done, okay, we've had a big impulse towards this internal range liquidity target. And if you remember anything about the New York continuation cycle, we look for London to impulse towards our liquidity target, and you can see that price just didn't quite reach it. So it makes sense for New York to continue this impulse. So essentially what we're looking for is that retracement in between sessions into some kind of PD array, and then we're going to go ahead and expect New York to run to the downside and complete that target. So in terms of sell zones, we have a 1 hour FVG here. So that makes a very nice sell zone. Now we need that retracement. So if I play this out on the 15 minute, you can see that we get a nice pre-New York retracement into this 1 hour FVG. And if I go on to the lower time frame, like the 5 minute, you can see that we manipulate this old high. Okay, so we've taken out liquidity. We've got that little retracement after London session, right? You can see New York opened up and retraced into the sell zone. Okay, so now what we would anticipate is for New York to run to the downside and continue the move towards this target. So this is the time where we look for the entry, and step 3 is the flexible entry model. So all we're looking for is a switch in order flow. So this bullish order flow here, we're looking for that to switch, and then we can enter off of any of the bearish PD arrays that form towards that target. Okay, so let's play this out a little bit and see how it unfolds. So you can see here we get a nice 5 minute CSD. Okay, so price forms this bearish order block. If I zoom in a little bit, you can see that this last up candle was closed beneath. That forms a 5 minute CSD. And we also close through this little bullish FVG that's within here. This down candle closes through that. Okay, so we have an IFVG and we have a CSD. Now, the importance of the flexible entry model is you don't know what PD array price is going to react off of. Right here, we had the option of an order block or an FVG. If you were just saying, I can only enter off order blocks, you probably would have missed this trade. But because we can be flexible with it, we simply go ahead and enter off the most conservative PD array, which is like the lowest one. In this case, that's the IFVG. So you enter off the IFVG, stop loss can go at the high. And from there, we expect the rest of the daily cycle to play out and target that internal range liquidity, right? So now if I play this out, you can see price runs very nicely towards the target, right? And we reach the target right around the end of New York session. So this played very nicely. And this is a 1 to 5, right? So right there, boom, 5R. I almost forgot to mention, I'm pretty sure I called this trade out to the free Discord. So if you want to join that, it'll be the second link in the description. Let's get into the next example. This one's on Euro USD on the 16th of December 2024. So if you want to check it out, you can. The first step is daily bias. So you can see we've swept this old high out here. Price is now moving to the downside. I would say that we're drawing towards this external range liquidity. On a more intraday level, you can see this external range liquidity was swept. Then price started to retrace. So if we get the confirmation in here, it makes sense that price would run to the downside and target this external range liquidity. So that's the daily bias. We're bearish, probably targeting this external range liquidity. Now we want to see the daily cycle. So we want to start by looking at what London session has actually done, right? This purple box is London. You can see it swept out this old high as well as this old high in here. So we've manipulated liquidity and price has run to the downside towards these old lows. Okay, but price hasn't quite reached the target yet. So if we're thinking about one of the New York cycles, it doesn't really make sense for New York to manipulate this and then drop, because we've already got a manipulation up here. So it makes sense to use that continuation cycle again. So what we're looking for is for price to retrace, then for New York to continue the move lower. If we want a sell zone, we have this 1 hour FVG here that would make a very nice sell zone. Now we're looking for that retracement, and you can see we got a push to the upside into the sell zone, which manipulated this liquidity. And then if we were to go ahead and use that flexible entry model, we're just looking for bearish order flow to form, and you can see we formed this bearish order block here. So that confirms the switch. My personal entry was off of this 3-minute FVG here, right? If I highlight that, there's a 3-minute FVG there. That was my entry, and my stop loss was at the high. And you'll see that this actually took me out for a loss. And this is why them jarring ones, you know, you wait for a trade and then it just goes straight to SL. But I guess it's just like ripping off a plaster really quickly. It's not that bad. So this was one of the losses, right? And I actually was down 1% off of this trade. But given the other trade, if you were using this process, you're still up 4R. Now, when I told you that you could be up 8R in the past 2 months, I actually lied, because you could be up more like 10R if you had used this opportunity here. So after price took out my SL at this high, we actually got a CSD later down the line. Now, when we got this, the bias was still valid. This is still a valid example of a New York continuation. The retracement was just a little bit longer. So if you wanted to, you could have entered off of this CSD here with your stop loss at the high, and then you could have just held at our 1 to 2 if you wanted to. And as you can see, that run to the target. Now, unfortunately, for whatever reason, I didn't take this second opportunity. But if you did, you would be up more than 8R over the past 2 months. There's 2 more examples I want to show you, and the last one is a banger, so make sure you stick around for that one. So we're back on gold. This one is the 13th of Feb 2025 if you want to check it yourself. Step 1. Daily bias, right? You can see we're respecting bullish arrays like this bullish FVG here. Price has tapped into this bullish order block here. So we're respecting bullish arrays. The daily is bullish, but now we need to know if we're targeting internal or external range liquidity. Well, if I jump down onto the 4 hour, right, you can see that price has respected this bullish FVG here, and now is pushing to the upside towards this old high. So I would argue that we've rebalanced internal. Now price is moving towards external range liquidity. The 4 hours in line because we're forming bullish arrays like this bullish order block here. Now it's time for the daily cycle. Now again, we want to look at what London session has done. Okay, so this particular London session came into this FVG here, but it hasn't really manipulated, and we haven't really got a big impulse. And if we look at the low of the session down here, you could argue that these are relative equal lows. So when it comes to the New York daily cycle that we're playing, this doesn't really look like it's setting up for a New York continuation, which means if we're going to use one of those 2 daily cycles, it would have to be a New York reversal. So for this particular cycle, we're looking for price to actually manipulate London's low, then give us an entry model, and then we can go ahead and enter off of any bullish PD array towards the target, right? So let's play this out. We want to see New York session open and take out London's low, right? Which you can see happens here, right? You can see this is London's low. New York kill zone has manipulated that. So now we're anticipating that New York is going to run to the upside. So we want to look for an entry. If we go on to the 5-minute time frame and we play it out a little bit more, you can see that price forms, first of all, a 5-minute CSD, right? We close above these last 3 down candles here with this bullish candle. So that's the CSD, building that bullish order flow. I entered off of this trade using this range here. I entered off of that. I classed that as a propulsion block. My entry was at the wick and my stop loss was at the low. So that was my entry. I was now looking for New York session to run to the upside. And if I play it out, you can see we do actually get a decent run. And if you remember the timings that I spoke about when I showed you these cycles, you'll remember the New York reversal can run through London close until around 5 p.m. So this was after the kill zone. I was still happy to see it run to the upside. And you can see we do actually get a pretty decent push. But around about here is 4:30. So we have about half an hour left in that time window. So I put my position at break even, because if this is going to run to the target within the specified time window, I want to see it happen now. Okay, I want it to see it run now. So I move my position to break even, and you can see we come back and we end up taking out my position. No harm done, right? There's no gain, there's no loss. Now, if you're the type of trader that doesn't manage your positions like that, and instead you're more of like a, I'll hold my trades, you know, until they hit SL, no break even type, I don't recommend you trade like that, but that's just my personal opinion. If that is how you trade and you just left the position, then you would have actually got a successful position, right? Because you can see we still respected this New York low, and price ran outside of any of these kill zone timings, right? So maybe you would have secured more profits there. For me personally, that was a break even. This leads me to the last example, and it's an absolute banger, and it's a great example of this New York reversal cycle. So let's get into that. So this last trade is on GBP USD. However, I got my draw off of the dollar index. So you can see here that price is respecting this bearish FVG. Okay, we also formed this bearish CSD here. So in my opinion, we're forming and respecting bearish arrays, so the daily is bearish. Now, are we targeting internal or external range liquidity? Well, we've already returned to internal, right? We rebalanced that FVG. So it makes sense now that price will run to the downside towards this external range liquidity. Okay, so that was my draw, which means on GBP USD, my draw was to the upside. Okay, so we are bullish. We have a bullish daily bias. Now it's time for the cycle. So as usual, we want to look at what London session has done, right? So this purple box, again, London session. You can see we did push to the upside, but ultimately we had a bearish session. So we haven't had a bullish impulse in the direction of the draw. So it's not going to be a New York continuation because there's no move to continue yet, okay? So if we're going to play one of these daily cycles, it has to be the New York reversal. Now, in terms of buy zone, we are within this bullish order block. And we also have this bullish FVG here, which I'm pretty sure does get tagged. Okay, so that's the buy zone. We want to see New York take out London's low. Okay, so that's London's low. That's going to be the liquidity sponsor for the move. So we sit on our hands and wait for that to happen. So if I play it out, you can see New York session comes and we take out London's low. So from here, we're anticipating that New York reversal to play out and for New York to run to the upside. Now we need the entry. If I go on to the 5 minute, you can see that price forms a 5 minute CSD. Potentially you would have entered there because now that is the bullish order flow building. I personally like to see displacement through a swing high. And if I play this out, you can see later on we get the displacement through a swing high here. This is a swing high and price has closed through it with this candle. So that qualifies, right? And I was actually looking to take this trade, but I was at the barbers at the time and I didn't see the displacement, so I didn't take the trade. And I thought that it was just moving sideways because I was just looking at it on my phone. And it was stupid of me. I shouldn't have really gone to the barbers during New York session. It was just a dumb mistake and I ended up missing this trade. But if I was at home, my entry would have been off of this 5 minute immediate rebalance. Again, this highlights the importance of being flexible with your entries because here, there's no FVG, there's no clean order block, right? The only PD array you have is a 5 minute immediate rebalance. So you have to be okay with entering off of any PD array once you get the entry confirmation. And I have a little trick where I put the stop loss at liquidity, okay? You can't do this for every trade. I teach how you can do it in the intraday course, but it basically would allow you to get a really nice SL placement. And from there, we're just expecting price to run for New York and target some kind of external range liquidity, like this London high. But really, we're basing a target off of the draw on the dollar index, right? So you can see we get a nice run here. And if we go onto the dollar index, you'll remember that I drew out this as the draw. And you'll see that gets hit at 4 p.m. So it's in that last hour of that 3 to 5 p.m. period that these New York session reversals can run to. Okay, so we hit that at about 4. which means that on GBP USD, we would take profits once DXY reached that draw, which is here at 4, which is about a 1-to-4 risk to reward. Now, even though I slacked and I personally missed this trade, I called out the draw on the dollar index in the free Discord, right? So I called this move to the downside in the free Discord. So again, if you want to join that, it is the second link in the description. Following these 3 steps over the past 2 months, you could have easily come out with over 8R in gains. So if you want to keep it simple, you just want to trade New York, you only want a couple daily cycles, that is exactly how I would go about doing it. As always, I hope you found value in this video, and I will catch you on the next one.